Hello and welcome to a new video of FMTTM Future of Finance. In today's video, we're going to be discussing different ways to invest your money. Before we get into the different ways to invest your money, I just want to take a moment to remind you that investing always carries some level of risk, and it's important to do your own research and consult with a financial professional before making any investment decisions. This video is for educational purposes only and is not intended to be investment advice. Let's start. Investing is a great way to grow your wealth over time and achieve your financial goals, but it can be overwhelming to figure out where to start. That's why it's important to understand the different investment strategies that are available and choose the one that's right for you. Let's start with stocks. Stocks are a type of investment that gives you ownership in a company. When you buy a stock, you become a shareholder and you're entitled to a portion of the company's profits. There are many different types of stocks, including common stocks, preferred stocks, and blue chip stocks. Common stocks are the most common type of stock and represent ownership in a company. When you own common stock, you have the right to vote at shareholder meetings and receive dividends, if the company declares them. Preferred stock is similar to common stock, but it typically has a higher claim on a company's assets and earnings. Preferred stockholders may also receive dividends before common stockholders. Blue chip stocks are stocks in well-established companies with a strong track record of stability and growth. Stocks can be a high-risk, high-reward investment, and it's important to do your research and diversify your portfolio to reduce risk. One way to diversify is to invest in a range of different industries and sectors, such as technology, healthcare, and finance. This can help to mitigate the impact of any single company's performance on your overall portfolio. It's also a good idea to invest in a mix of growth and value stocks. Growth stocks are stocks in companies that are expected to grow at a faster rate than the market as a whole, while value stocks are stocks in companies that are undervalued by the market and may offer a higher potential for return. Another investment strategy is real estate. Real estate investing can take many forms, including buying rental properties, flipping houses, or investing in real estate investment trusts, REITs. Buying rental properties involves purchasing a property with the intention of renting it out to tenants. This can be a stable investment, as you'll receive regular rental income as long as you have tenants. However, it also requires a significant upfront investment and can be time-intensive, as you'll need to manage the property and deal with any maintenance issues that arise. Flipping houses involves buying a property, making renovations, and then selling it for a profit. This can be a more risky investment, as it's dependent on the real estate market and your ability to correctly estimate the value of the property after renovations. Real estate investment trusts, REITs, are a type of investment that allows you to invest in real estate without having to buy and manage physical properties. REITs are required to distribute at least 90% of their taxable income to shareholders in the form of dividends, which can make them a good source of passive income. Real estate can be a more stable investment, but it also requires a larger upfront investment and can be more time-intensive than other types of investments. It's important to carefully consider the pros and cons and do your research before diving into real estate investing. Finally, let's talk about cryptocurrency. Cryptocurrency is a digital asset that uses cryptography for secure financial transactions. Bitcoin is the most well-known cryptocurrency, but there are many others as well. Cryptocurrencies are stored in a digital wallet and can be bought and sold on cryptocurrency exchanges. Cryptocurrency is a relatively new and highly volatile investment, and it's important to do your research and be aware of the risks before investing. Because cryptocurrencies are not regulated by governments or financial institutions, there is a higher level of risk associated with them. The value of cryptocurrencies can fluctuate wildly, and there have been instances of exchanges being hacked or going bankrupt, resulting in the loss of investors' funds. It's also important to be aware that cryptocurrencies are not FDIC insured, so if you lose your digital wallet or your password, your investment could be lost forever. That being said, some investors see cryptocurrency as a potentially lucrative investment due to its high potential for growth. Bitcoin, for example, has seen tremendous price increases in recent years, although it has also experienced significant price fluctuations. If you're considering investing in cryptocurrency, it's important to do your research and only invest an amount that you're comfortable losing. It's also a good idea to diversify your portfolio by investing in a range of different cryptocurrencies rather than putting all your eggs in one basket. In another video, we go deeper into what cryptocurrency is. These are just a few examples of the many investment strategies out there. It's important to do your research and choose the strategy that aligns with your financial goals and risk tolerance. And remember, investing always carries some level of risk, so it's important to be prepared for the possibility of losing money. Thanks for watching. If you found this video helpful, don't forget to like and subscribe to our channel. And if you have any questions or topics you'd like us to cover in the future, let us know in the comments.